let me welcome everybody to the NAGA Group Full Year 24 Update and Outlook. My name is Henry. I'm an equity analyst at NuWays, and I will be moderating today's call. And I'm pleased to have Tavi and Ricardo with us today. Tavi is the CEO and Ricardo is the CFO of the NAGA Group. And we will start shortly with a short presentation. And afterwards, you will have the chance to ask questions. For that, we have two options. Either you can raise your virtual hand, and then we will unmute you, and you can ask a question directly via audio line, or you have the option to put a question in the Q&A box, and then we will read them out and get the question answered. But without further ado, let me hand over to Tavi, who will guide us through the presentation right now.
Thank you, Henry, for introducing me and introducing us. Good afternoon, everyone, and thank you for joining today NAGA, where we're going to present our 2024 preliminary results, and we're going to have also an outlook for 2025 and 2026. I'm happy to be in front of you here to speak about what happened in 2024, what were our achievements, what we did good, what we did bad, and what we're going to have also for the future. So now, in a few seconds, we're going to start the presentation. So since Capital Markets Day, or since the merger, our mission and direction hasn't changed. We want to have the best super app out there so it can really compete, where we're offering everything when it comes to money. So that means that besides the narrative of democratization of everything what it has to do with trading and investing, we would like to simplify all the money management. That's why in our super app, we can have everything what it has to do to trading, investing, crypto, payments, and also social trading. This is not just another fintech app. This is our long-term bet, and this is what we want to achieve also, and how we are positioning ourselves, because we want to be a dominant player in this field, because NAGA was among the first in Europe that had an MVP for a super app, and now we're just improving it as time goes, so we can make sure that we can form a very strong community on it. So it's just not just a short term. Now, what I would like to say, because now the market is really hot for the super app, and we see a lot of our bigger competitors that are in the market for many years before us, we see a shift, and from their traditional trading apps or investing app, they're also changing to the narrative of super app. So that means that there is a big market and everybody's trying to follow this trend, and we are lucky that we are in the pole position for this. So today we're going to speak a lot about the data, a lot about what happened in 2024, and it's going to be divided in two presentations. One presentation that I'm going to keep, which we're going to be more operational and KPI driven, and then my colleague, our group chief financial officer, Ricardo, we're going to speak about all the financials that happened in 2024 and what is the outlook also for the future. So moving on, 2024 was about execution mostly and not excuses. And we can say that we closed the merger faster than the industry standard. And this was a very big win for us, because we really stayed focused on driving through all the complexities that a merger starts with, because there are a lot of companies that we have on a group level, and we have also a lot of licenses. While we are doing this, obviously on the business side, we streamline less profitable business units, and we try to strengthen our good ones. So this also aligns with our regional growth, which we're going to see in which regions we have grown. And on the financial side, we did a lot of cash flow optimization, and you're going to see on the numbers that actually on some cash flow optimization, we exceeded our expectations. We did a lot of synergy realizations, and we also secured some resources for our future growth. While we are doing this, that this is exactly done for the merger purposes, we did also a lot of changes in the tech, in the marketing, and also in the culture of our company. So we try to sustain everything what we said in the beginning. So in terms of our technology, we started to enhance our product and our technology, and a lot of changes are done on the backside, so we can have a more stable platform and we can have a more scalable platform. And these are things that you're going to see on the long term. We had to restart everything what it had to do with the marketing. And this is our key driver for 2024 in terms of user acquisition, branding, and everything what we did on the social and strategic partnerships. And obviously on the culture, we worked a lot because these were two companies that merged together. So we wanted to have a unified brand or unified company culture post-merger. So we can make sure that we're going to really have a strong team, an ambitious team that is also disciplined. And while they're moving fast, they also can be like real managers that take decisions and they are responsible. So all in all, what I think it's important here to mention on this merger is that we started to scale with discipline. We started to scale with more focus and not have a reckless expansion. So here are some of the key highlights in terms of 2024. And we had also some first timers, which I think it's important. So we try to divide it on 3 rows. So number 1, we have 10 active licenses and we have another 2 upcoming licenses. So as a group, we are talking about 12 active licenses that give us the possibility to serve around 190 countries. And it was the first time in the history of NAGA since its inception that we managed to reach to the milestone of having more than 2 million registered users in our ecosystem. And this brings us to a cost of acquisition of 1,125, and we maintain a bigger client lifetime value that is, you're going to see that it has grown, and this is the first time it reached to this level of 3,340, and an average deposit per new client, per new user was around almost 5,000 euro. Now, another milestone we achieved is that since the inception, we had 180,000 new clients, which is different than registered users. And in 2024, we reached the milestone of 100 million total deposits. This was more of a psychological milestone that me and the team, we wanted to achieve since the beginning of 2024. And we are happy that by the end of the year, we managed to achieve this. And while we're doing this, we also reach our biggest trading volume since yet, which is 224 billion euros. So moving on, when we are talking about the user growth and all of our KPIs, we had in 2024 a growth of almost 200% in new registered users, and we almost reached the milestone of 390,000 registered users. And this brought us on new clients, which have like a minimum deposit, and we reach a growth of 52% to almost 20,000 new clients. And the active number of clients grew with around 52%. Now, what's important to understand today is also what the clients are doing and how is the retention done for them in our platform. And you're going to see that we have 55% of our clients staying more than 1 year and 31% that stay more than 2 years. And as long as we're changing the acquisition channels and the regions and we are enhancing our product, I think this KPI we're going to grow more and more and more. So as you can see in 2023, because marketing was not really present in NAGA as it turned the engine down and they had a very low spend, most of the users came from the organic. So these were efforts that NAGA did in the past, 2020, 2021, 2022. And from these, new users came organically in 2023 without adding new acquisition channels. But you're going to see that in 2024, we had more unequilibrated channels where we did all the acquisition, which is split it in digital market, which is our internal efforts of media buying. We started again very strongly on the affiliate side. So you can see in 2023 was almost 1%. Now we're talking about 27%. We started to have partnerships. We launched also Telegram. We started to launch more influencers, and you can see also the organic. So in terms of registered users by channel, if we see the pie chart on the right, this is going to give us the possibility to have more predictability and less volatility, having more channels that you can rely on. So on the financial and trading metrics, our net deposits, which is the principal indicator, grew with around 65%. And this happened also because we started to change also the withdrawal rate, and we saw like a 20% drop in the withdrawal rate. So that means we improve our financial instruments and our offering, we improve our tech, and this is why we have the drop, which is a positive for us in terms of withdrawal. So that means we have more stickiness in the platform. Now, as you can see, the trading volume from 2023 to 2024 has grown 57%. So we have reached 223, and the markets were not that volatile. If we have seen more volatility and we have done the merger fast and to act as a single company, we could have seen also an increase in terms of the trading volume. So the numbers I think are good, but here what it matters is that our users are transacting more and are trusting more our ecosystem. So this is a validation on the merged entities of the product and the strategy. So now I think this is a very important slide, and I know that I'm going to repeat myself, but in 2023 in NAGA, we had a low acquisition budget. We had no branding. There was mostly one country in Europe that we focused. 90% of the revenues came there, and it was Germany. And we had like untapped opportunity in influencer, which we can tap now more. So 2023 was 2024, was a year where we did a lot of changes here. And in the market, because you have seen as firsthand that we started to do a lot of branding, including global sponsorships like Mike Tyson, and also we did the Borussia Dortmund. Besides this, as you can see, we had like regional acquisition strategies. So we started to expand in GCC, in LATAM, and in Asia. We did a lot of changes also on the client journey, which you're going to see in the next slide. So we did a lot of changes on the onboarding funnel. We did a lot of changes on the landing pages. We changed our marketing automation system so we can make sure that we can have a positive ROI when it can, which can bring us on the acquisition side. And this brought us better KPIs. So we had 78% new clients from the internal media buying. So we restarted. We increased our conversion rate from the channel of influencers. If in 2023 we had around 13%, now we have around 90%. We get new traffic from affiliation, an increase of 25%. And also we started to have new users and new clients from different partnerships, including Telegram. So this has been the change in terms of marketing. So we had to restart everything. And as you know, marketing cannot bring you a fast ROI and fast results. It needs to be like a 360-degree strategy where you do a lot of branding, you do a lot of partnership, you do a lot of media buying, and then the results will going to come how we can predict it, especially if we are aligned on a product and tech level. So when we're talking about marketing insights, which I think it's important, you need to understand that our revenue growth came also from all the automation that we did. So as I said, we had like a new client journey that we completely changed, and we added a new marketing automation platform. And this brings us new flows for different funnels and verticals. We started to improve our product offering and also what kind of financial instruments we are offering. So we added more and more financial instruments and features for the users. That's why we have now more than 4,000 trading instruments on Class. And we also started to do tweaks and changes on our social trading. Now, last year, we didn't do big changes. We just do small tweaks on the design and leaderboard improvements. And we also optimize the copy trading fees to make sure that we're boosting the engagement and profitabilities. But now we're going to launch like a new social trading, which we're going to change exactly the experience. And all of these efforts brought us on what I said also on the other slides on a different scale, and also where the revenues are coming in from which regions. If 2023, 90% was from Europe, now we're going to see that 45% is from Europe, and GCC, it's almost 38%, while we have LATAM and other countries 11 and 6%. And as you can see, due to these changes in the region and in the product and all of our marketing initiatives, we had the chance to have an increase in the client lifetime value from 3,000 to 3,340. And this is a split on the client lifetime value per region. So you're going to see that in GCC, we have the biggest client lifetime value, which is almost $5,225. So that means that our strategy today, it's working because GCC surged from 3% in revenues to 38% post-merger. So we believe that our strategy now for acquisition, it's solid. We just need to do better scaling for the future. Now, all of our operational efforts and all of our marketing efforts and spend needs to go hand in hand with the product. So in the beginning, in 2023, as you are aware, NAGA had free platforms. It had NAGA Trader, which are doing trading and investor, had NAGA X, which is doing only crypto, and has NAGA Pay, which is the super app. So now we changed to two apps, and this is what we're going to push further on. NAGA Trader, where you can do trading and investing and social, and NAGA Pay, which we're going to transform in NAGA One, and we're going to improve now all the verticals into one that exists even today. And for this, we're launching also new products. So we're going to have a new social trading engine. We're going to change the design and the user experience in NAGA Trader 2.0. We're going to add new products like Auto Invest so that the users can enjoy this product, and it's going to be an Auto Invest module. So it's like passive investments. We're going to launch the spread betting. We're going to launch more and more tools for trading. And we're going to launch soon also our cash interest. So our users can make money on their cash while their cash is sitting in the platform. Now, obviously, there's a big change in AI from month to month or even from week to week, and we want to tap on this. That's why we built internally a squad that is focusing only on AI products for our trading app. So we're going to launch AI trading agents, and that means that our users can see on the AI trading agents what they are trading and they can copy them. We're going to have AI social agents, which we're going to generate real content by scraping different funnel of information so that the user can get more information on the market in a more democratized way, but also more organized way. And we're going to have also an AI trading assistant, which we're going to help the users know everything about our platform, about our promotions, how to use it better, also about our commissions and so on. This is for the short term, and this is our focus today, but we're not letting go the long term because NAGA Pay needs to transform in NAGA One, and here we're adding different other instruments, meaning this is going to be our one app improved with multiple licenses. We're going to have the ultimate wallet. So when we talk about this digital wallet, we need to make sure that it's going to be incorporated in a lot of other wallets. So it's going to be very easy to deposit money with us, either if we're talking about fiat, either if we're talking about crypto payments. We're going to have instant transfers. We're going to have, for the first time in NAGA, a global card program. So if our card was mostly from Europe, now we're doing everything necessary in the back end and also in the front end with licenses so we can offer it globally for all of our user base. We're going to have crypto staking. And one of my favorites is the portfolio backed loans. So when you have your portfolio, either we're talking about stocks, either we're going to talk about crypto, you can leave it like a collateral and we can give you a loan. And the loan, you can use it in your card and you can spend money or you can do even more trading. And for scaling purposes, we want to launch up to Q2 a new partnership portal. So when we're talking about influencers, when we're talking about social leaders, when we're talking about affiliates or different other partners, we want to automate all of their experience in terms of onboarding, reporting, payments, and also based on leadership on how we're going to work better with them. So we can really onboard a lot of partners that are going to bring us a lot of traffic for this. So this would be our roadmap and what we are focusing this year. There's a lot of initiatives, and it's important to mention that with this roadmap, we are trying to reinvent how people manage their money. That's why we added also the AI power trading and so on, because this type of innovation can bring, with the same efforts in terms of marketing and branding, can bring our new next wave of users and revenue growth. So now we talked about operations, we talk about KPIs, and now we're going to talk about the important things and everybody that is waiting for this. So we're going to be about financials. We're going to have a few slides here where my colleague Ricardo, we're going to start and explain you everything what it happened in terms of numbers in the financial department. Thank you. Ricardo?
Hi, thank you, Tavi. Okay, so now looking a bit at the financials, they reflect mainly what Tavi already said in the previous presentation. But let's look at how this reflects on our numbers. So first of all, it's very important to mention again that 2024 was a year of transition. This means that the first step when we started the merger was to optimize our business units and looking at the ones that have more profitability so that we could increase the margin. This initially led to a decrease on the revenues, which usually is normal after this type of mergers. But at the same time, we managed to reduce more significantly the costs, which means that in the end, our margin increased and we are in a position to grow more sustainable in the future and with higher margins that can generate us enough cash to invest in our continuous growth. I would say that there are two things very important in this integration and optimization. First of all, the synergies. Initially, we announced that we would expect $10 million synergies in 2024, 2025. And we actually, up to now, we achieve 11 million euros in synergies, so approximately $12 million. Part of them already reflected in 2024, around 5 million, and the remaining will be in 2025. Also, in terms of the financing structure and our funding structure for the future, we repaid all NAGA financing liabilities during 2024, and we renegotiate a new loan with 30% cost reduction compared with the previous financial liabilities. This loan will allow us, and we expect to use it in future growth. You can change that. Now, looking a bit more in detail in terms of revenues and marketing, like Octavian explained, so in 2023, CapEx made most of the investment. NAGA had a very reduced investment in marketing, and when we merged, we needed to wait for the approval, the regulatory approvals, and the necessary integration of both brands. And while we transit to one single brand, the NAGA brand, we started and we reinvested again in NAGA branding, and at the same time gradually disinvested in CapEx brands. At the same time, we introduced the NAGA brand into new regions with higher CLV, which we expect that sustainable will grow again our margins. This was mainly done in Q4, most of these strategies. So we expect that in 2025, most of the marketing strategy will reflect, in fact, in the results of that year.
I would like to add something here, which I think it's very important that everybody understands. So first of all, one of our key challenges was that, as I said, in 2023, NAGA stopped the engines in terms of marketing. And when you restart the engine, it's going to take time until everything will going to work out fine. So this was our biggest challenge. Besides the fact that we had this challenge, we had to wait for integrating the brand, getting approval for the licenses, and also aligning the product to what we are doing. So we couldn't benefit from all the power of the merged entity right away. We started actually to benefit only in like the end of Q3 and the beginning of Q4. If we had this from the beginning, obviously we could have had bigger numbers. I don't see this like a failure, but if we wanted bigger numbers, for sure, yes. So these were the key challenges. And now we don't have any more these challenges because everything is aligned. As I said, on the product, on one brand name, all the licenses together merge, and now we restarted the engine. So when you restart the engine, you can auto-tune while you're doing this. So we overpass this challenge, and now we can really focus on the growth. So I can switch to slide 12, Ricardo?
Yes. Okay, so now looking a bit at the cost side, as I mentioned, the synergies already, but it's very important to mention that all this margin increase and cost saving was due to a great effort of the team, we thank for, and it came at the expense of renegotiating intensively all our suppliers' agreements, changing many terms, unifying agreements, and obviously some staff reduction due to redundancies. So we managed to cut 24% of our staff. Again, this is already reflected, part of it in 2024, and the remaining will be in 2025. Also in 2025, most of the renegotiation with suppliers will be reflected, as we need to respect, obviously, the terms with the suppliers, and many of them were renegotiating during 2024 with applicability in 2025. Obviously, in 2025, we want to continue to reduce. We are not happy yet with the 11 million. We think we can achieve more. So we will continue to look at ways of optimizing, ways of digitalizing, ways of automating all our processes and saving more costs and becoming a more linear and more linear organization.
Okay, page 14.
Okay, now this is my favorite page. So our main focus all the time is cash. So one of the things we wanted to make sure it happened this year is to make NAGA self-sustained for the future. And I think we totally achieved that. First of all, we had a very positive operational cash flow. This is the result of what I already mentioned, focus on margins. At the same time, we managed to reduce the investment, while in 2023, both groups were investing by themselves in tech. In 2024, we invest in one single platform, so that is also a reduction. And we pass from a burning cash situation in 23, if we would look at the two groups together of almost 900K per month, to a cash surplus in 24 of 100K per month. And we want consistently to increase this number so that we can continue to invest intensively in our expansion and development. And now we go a bit to the perspective for next years. So basically, this reflects what we already talked until now. So the marketing efforts that started in Q4 24 and will continue in 25 should lay to us a significant increase in sales. At the same time, all the efforts that we did in reducing the costs, optimizing our structure, will continue to increase our margin. Our goal is to achieve a 30% EBITDA margin, and we will continue to look into achieving that goal. And now maybe we can look also a bit on how we are going to do that. Tavi, next slide. So here we look a bit of exactly that marketing investment. So we ramp up the marketing investment in the end of 24 and we continue 25. This will increase slightly the full marketing cost acquisition per client. This obviously it's something temporary as we optimize and we invest intensively in branding. Once the branding is in and there's more brand awareness and all the retention initiatives that Octavian spoke about will continue to lay down, will continue to increase the efficiency of cost acquisition and reducing the CPA. On the cost side and looking again at our staff, part of the initiatives of 24 will still reflect in 25. We think we now have an optimized structure, but part of that optimization happen in the end of 24. So it's still going to be reflected in 25, especially on the internal support staff. But at the same time, we want to support the growth, and on the core departments that support that growth, we are planning to invest a bit on growing those departments. That investment is still below the costs of the two groups together back in 2023. But we feel that is necessary so that we grow sustainable. At the same time, I think this is quite conservative from our side because we continue to implement AI tools and other tools to support clients. So potentially we might not need all the stuff that we are planning here. So we might be below this number. And in the cost side, I would like just to say as well that our actual cost run rate, monthly cost run rate, is below the estimations we made in 25. So it's already there, the saving.
So I would just like to add that we feel that it's a market momentum on the product side, on the tech side, and on the feeling of the retail market and community. And as you can know, surprises can happen. We just wanted to be conservative. Because it can be a lot of volatility in the market. It can be new things that's going to happen on the crypto side, on the trading side. But we know that it's a great momentum. And we all the time say also internally that luck is when preparation meets opportunity. So this was our mindset. And maybe we can have a little bit of luck, but eventually we want a sustainable growth. And this is the numbers that we think are going to be happening. And this is why we're pushing in this direction.
Yeah. On a final note regarding this forecasts for 25-26, here we incorporated only growth based on our actual resources and scaling our actual resources. But at the same time, we know the market is in a consolidation phase. There are acquisitions out there. We also did very successful this merger this year, and this team also did other acquisitions in the past. So we are ready to tackle those acquisitions. They are not incorporated here. We already secured funding for starting this process, but once an opportunity appears and arises, obviously we will announce to the market and we'll issue an updated guidance on it.
Okay, so I think we can go to the final remarks. So guys, as you can see, we are becoming more and more efficient because we're going to wrap this presentation in 30 minutes. Usually I speak for at least 1 hour. So we're becoming not only more efficiently in the company, but also on the presentation. So I would like to say a few conclusions because this is the end of the presentation. We're going to move to the Q&A. So first of all, we executed a successful merger. This was a big challenge and it was very time consuming, energy consuming, etc. And now we have time to do what we like, to do business, to grow. We unlock initial synergies, as you can see, 5 million for 2024, and we are locking up to 11 million euro in synergies, more than what we predicted. I'm very happy that mentally we broke down this 100 million total deposits in 1 year while being cash break even. We increase our EBITDA margin with 20%. We increase our client lifetime value. It's not enough. We could have done better, but we are working very, very, very hard for this, and we are scaling. Bottom line, what I would like to say to everybody is that we are running a marathon. We are not running a sprint. So for me, in order to scale, because this is where the big growth comes, this is where the company can completely change from scaling. And from my experience on building other companies, you can scale only once you have the correct foundations in terms of tech, product offering, teams, mentality, and so on. So there was a lot of things to do in 2024 so that we can do better in 2025. That's why NAGA today is built to scale. 2024 was about transformation. Now it's about scale, predictability, and also sustainable growth. As I said, we are not sprinting. We are building a long-term fintech powerhouse. It's not easy to build, but we are fully committed for this. So thank you very much, guys, for this. And now we're going to start the Q&A session. Henry?
Thank you.
Perfect. Thank you very much for your presentation. Now you will have the opportunity to raise questions. For that, please go to the bottom of your screen and push the virtual raise your hand button. Then I can unmute you, or you can also write a question in the chat. Okay, please go ahead, everyone. The floor is open. First up, we have Frederick. Please go ahead.
Yes, Tavi, thank you a lot for the presentation. I have a couple of questions. Maybe I start with the first one. Could you quickly repeat what's behind the decline in the top line of the full year? Maybe I missed that. I remember that you explained it already, but maybe you can say it again.
In the decline in the top line in terms of revenues?
Yes.
As I said before, for us, it was important to resolve the problem with the cash and to reach our target of EBITDA. And we closed a lot of business units that were not bringing us the numbers that we needed, and we didn't want to take a risk. So we wanted to play on the safe side. And second of all, which is important, we've been through a merger. As I said, we can anytime boost the marketing and the revenues, but we're not going to boost the profitability and we're not going to boost the EBITDA. Why? Because in the beginning, in the first months, we needed to, one, get all the regulatory approvals so we can do the merger. So we had to wait a lot of months and until we got the regulatory approvals. After we got this, we could have migrated to one single brand name, NAGA, instead of having two, and also to one tech, and also to one marketing team, and also to one promotion. So it took a lot of time for this, and we wouldn't want to do efforts on branding on two brands and spend marketing on two brands because it wouldn't reach the KPIs that we were looking for 2024. So this is the drop.
Perfect. I guess that's clear. Then the second question is, how have the number of transactions developed against the pro forma figures of 23? And explicitly, how was H2 compared to H1?
So basically on the trading volume, obviously compared to, you're asking only about pro forma.
Yes, and not the trading volume, the number of transactions. I have seen in the presentation that the volumes have increased per trade, but how has the number of transactions developed?
So we put only one KPI there, which is the closed trades, which you can see, and the closed trades was less than last year. But this is not actually indicative for working lower. It means that the users kept more positions open and they didn't close them. So maybe they had profits, maybe they believe in the market and want to keep them longer. Also, we had a lot of crypto enthusiasts that they keep their position more and more in the market due to the bullish sentiment that we saw in the market.
Then could you already see that the average revenue per trade, the position is...
It was bigger. As we saw there, and this was the principal indicator, was the client lifetime value. And the client lifetime value was bigger than it was last year. And we're seeing this not only because we restarted the marketing. And as I said, the marketing procedure, when you start again from zero, it takes time until you're going to fine tune it. Remember, in 2024, in 2023 in NAGA, there was almost no marketing. Like my colleague said, it was only 4 million per year in marketing from NAGA. So now we had to restart the engines. We had to start the marketing, and it takes time until you're going to fine tune it. But even though with these challenges, we had bigger client lifetime value, more registered users, and bigger deposit per user or per account.
Perfect. And then my last question for the moment, what is behind the position of depreciation and amortization, the 10 million, roughly?
I think here my colleague can answer CS field.
Yeah, I can answer two things. First, the H1, H2 results, and just to add on top of what Tavi said, that if you remember, H1 EBITDA was around 2.8 million euros, and H2 we made 5.4 million. So exactly showing that optimization, that margin focus, while the revenues were quite similar, I would say, semester by semester, and considering as well that most of the marketing efforts were in Q4 and still didn't lay down the results, which we expect now in 25. On the depreciation side, it all is all the technology development that NAGA made in the previous years, and also CapEx, part of it mostly on internal tools. So we continue to depreciate. It's very similar to the previous years. And we continue to invest, but invest much less. So as you see, we are depreciating 10, we are investing now around 4. So obviously in time, this depreciation has tendency to decrease.
All right, great. I think that's from my side for the moment. Maybe I will ask a further question later on.
Thank you, Frederick. Next up is Joachim Sorg. Please go ahead. Mr. Sorg, please raise your question. You are unmuted. Okay. Maybe later. We have another question in the chat, which I will squeeze in at the moment, from Mr. Robert Duta. What is the biggest challenge or opportunity that you foresee for 2025 for NAGA?
The biggest challenge would be to deliver everything what we said on the roadmap. The biggest advantage would be we are in a pole position with the super app and with our offering, and we see that most of the big industry players from their legacy system, they want to jump to this new narrative, and I see an advantage for us here. And obviously the advantage, because we are restarting the marketing and we are having a lot of initiative and projects there, I think this is our main advantage where we can grow more. Because once we fine-tune the marketing and we have the correct infrastructure, and once we scale, the budget will not going to have a big impact on us, and we can really grow much faster.
All right, thank you. Next up, we have Mark Evans, and then afterwards we will try again with Mr. Sorg. So Mark Evans, please go ahead.
Yeah, hi Tavi, Ricardo, thank you for the presentation. You touched on the AI strategy. I just wanted to get a bit more information on what the strategy exactly is. Are you planning sophisticated automated trading bots to, implement new strategies, these kind of tools to really help both novice and experienced traders increase overall trading activity? What is that the plan?
So I can elaborate here. So we did an internal squad that is focusing only on AI. So we have it in two timelines. Timeline number one is that we want to use AI only for the product and for the benefit of the product. And timeline number two is that we want to use AI internally so we can streamline operations. But this is more on the longer term. So on the product side, what we're trying to do through the free AI agent that I just mentioned there. So the first AI agent is that it's going to be able to do trading by himself and other users can copy his strategy and what he's doing. And this we're going to need to see if it's going to be successful or not. But what we see in the market, it has potential. And this is mostly coming from the crypto world. Then we have the AI social agent, where the AI social agent, having access to a lot of data, we're going to be able to post, we're going to be able to create content on our social feed that we have in the platform so that users can read interesting things and maybe they can use this information. On the side of the AI assistant, it's simply a bot using AI that we're going to be able to interact with the user so that the user can know everything about our platforms, promotions, what commissions they pay, what happened to their portfolio. So this is like an advantage that it's going to be easier for them to onboard and to use our platform and get the information right away without waiting for customer support chats, emails, and so on. So this is our initiatives for this year. We're going to test them and we're going to be more smarter once we receive the data and see what's going to happen.
Thanks, Tavi. Do you have a sort of projection percentage uplift from these trading bots? Have you got any idea what you think it might increase activity to?
As prediction and what we did internally, but we don't have yet data, we believe that it's going to be an increase in the trading volume on people that use this AI agent between 15 to 33%. And we just correlate this with what happened with the social leader that we have in the platform and what happened with the users that copy the social leaders and how much their trading volume increase. So we just extrapolate with this. I cannot a round figure because I don't have the data. But as I said, we launch after a few months, we're going to know better.
Excellent. Thank you. If I can just ask another one. How does NAGA and the platform, plan to balance the increased demand for this crypto trading that we're seeing now, as well as implementing risk management strategies to protect users from the volatility, making sure they're there long-term and trading?
So all of this long-term trading, as I said, we have our social trading engine where we have a lot of leaders that you can copy and they have more experience. And maybe in the future, we're going to add also more. For sure, we're going to add more and more social leaders that have experience in tradings and our community can copy them and use their strategies. So this can be also like a risk management. Obviously, the user is responsible for his trades and he decides how much risk he wants. But with the AI trading agent, I think we're going to be able to educate more and more the users on the risk and what happens in the market and why the markets are volatile and so on. So I think this will going to be very, very useful. In terms of the offering, as I said in the platforms, we have now NAGA Trader and we're going to have NAGA One. So NAGA Trader, we are increasing continuously, but eventually in the future, we're just going to have one app with all the verticals. So that means that the users will not going to have only access to trading with leverage or trading crypto, but has access like today in stock trading, in different other financial instruments that come from payments. So he can create like a really balanced portfolio in the future.
Fantastic to hear. Thank you, Tavi.
Thank you.
Thank you, Mr. Evans, for your question. As we have no more question in the chat nor another hand raised, I think that sums up today's presentation. That leads me to thank Tavi and Ricardo for your presentation and every participant for joining. And I wish you all a good and happy day for the rest of the week. Bye-bye.
Thank you, everybody, for listening
to us. Thank you very much. Have a nice
Bye-bye.
Bye.